All right, welcome. Welcome. Thank you all for joining me today. I'm James Matthews with your coffee team at Consolidated Credit. I've been teaching financial education for over 5 years, and my audience is anywhere from homeless veterans to corporate executives and everywhere in between. Coffee stands for Knowledge of Financial Education, and we offer financial education and wellness programs that are tailored to suit you. Now, if you haven't heard of Consolidated Credit before, we're one of the nation's largest and oldest credit counseling agencies. We have an A+ rating with the Better Business Bureau, and for the past 26 years, we've helped over 5 million Americans get back on the path to financial freedom, in both English and Spanish also. Drawing on that experience, we launched Coffee, which offers a variety of financial education services, including this webinar that you're hearing today. So let's talk about why we're here today, financial spring cleaning. When people hear about spring cleaning, they only think of the clutter in their homes, but what about financial clutter? Many of us are just as messy with our finances as we are with our closets, garages, and spare rooms. Spring cleaning is a time to look throughout your house for things you no longer use and get rid of them. Just as often, it's a time to find your items that you forgot you had and put them to good use. Well, I'm going to show you how to do the same thing with your money. Why? Because financial spring cleaning isn't just a nice accomplishment, it can literally be a lifesaver. A messy house can be annoying, but messy finances can be destructive. There's a high price to pay for financial messiness. It leads to anxiety, which researchers say causes all sorts of serious problems. They found that people with a big part of their income tied up in credit card bills and high debt have more heart attacks, sleeping disorders, including insomnia, explosive emotional outbursts, which is bad, problems with smoking and being overweight, and divorce. So just a few of some of the bad things that comes along with it. But it's a bad idea to avoid the issues when it comes to finances. You can't just bury your head in the sand, refuse to admit that something is true and that there may be a problem. Don't let your pride or fear get in the way. You need to own up to it. It's not going to go away on its own, but with time, effort, and discipline, you can get your financial house in order. To begin reconciling these issues, I'll start off by telling you the top 5 priorities for financial spring cleaning. First, get organized, then calculate your net worth. Document retention. Will go over what you need to throw away, what you need to keep. Where are you keeping your money? Plays a huge part in this, and financial clutter that we can clear up. So in order to declutter your mess, the first thing to do is to get organized. What are your goals? What is your net worth, and what is your current financial situation? To get started, you need to assess the mess. What debts do you have? What do you owe? Start off with your credit card debt. Go over your statements and ask yourself, why did you buy that? Did I really need that? What am I doing? Because you need to realize how much it's going to cost you if you're not able to pay that bill off in full at the end of the month. Now, let's try to be clear. Let's try and clear out this credit card debt. You have to assess the mess before you attack it and reflect on what it is that you're doing and how you got to your current situation. Why are you spending so much money? What changes can you make? Next, list all the other debts you have, from mortgage loans, car loans, personal loans, and any other student loans, whatever outstanding balance that you haven't paid. Again, the only way to clear up your financial house is to know who and how much you owe. Know your net worth and be sure that you're banking with the right institution. Now that you've gone through your credit card statements and listed all your loans, you have a good idea who and how much you owe. The next thing to do would be to go over all of your assets. In order to figure out your net worth, you need to gather some information. Net worth is what is owned minus what is owed. So the value of all assets minus the total of all liabilities. The reason you want to do this is because it helps you understand your current financial situation and gives you a reference point for measuring progress towards your goals. From the previous slide, I discussed gathering all your statements, etc., to see who and how much you owe. Now you want a list of your assets. Assets can be real estate, valuables, investments, and the money you have in the bank. For example, like I said, the money you have in your bank, value of your investment accounts, your car, the market value of your home, business interests, personal property such as jewelry, art, furniture, and the cash value of any insurance policies. So once you have all that, then you do the math and subtract your liabilities from what you have. Just to reiterate, liabilities are your mortgage, car loan, credit card balance, student loans, etc. If you need a hand with this, there are a lot of net worth calculators and worksheets available online. You'll either be in the positive or the negative. If your net worth is low or in the red, that's negative, you'll need to work on saving more and spending less. To watch your progress, calculate your net worth now and recalculate it once or twice a year. Many have the question, how long should I keep this in regards to financial records and important documents? Well, let's discuss that now. Receipts, it all depends on how you paid and what you bought. If you used a credit card or debit card, then wait until your statement arrives so you can verify that the charge is there and is correct. Now, if the receipt is for home improvement or a big ticket item like a new fridge, then you'll want to hold on to it for as long as you own the item. Just in case you need it for warranty or insurance purposes, if something happens, and you may also need it for tax purposes. If you bought something impulsively and you may want to return it, not feeling so great about it, hold on to that receipt at least until the return period's up. For bank and credit card statements, these are also docs that can be shredded once you verify that the information is accurate. You'll want to keep the ones related to your taxes, business expenses, and home improvement. Good practice for these is 7 years. Statements are also available online through your bank account, credit card provider. I know that I no longer get paper statements of any kind because of paperless statements and the environment, but you can still download those that you need and save to your computer or a flash drive. Paycheck stubs. A good rule of thumb would be to keep stubs for 1 year until you get your W-2 from your employer. This way, if you can make sure they match. If they don't, you'd have to use those stubs for an amended tax return, which is very annoying. Mortgages and other loan documents. Keep documents related to mortgages and other loans, such as car loans or student loans, until you've paid off the loan. You may also want to keep these documents indefinitely in the event you're questioned about whether or not you paid them off. Property records, you'll want to keep these records on hand for up to 6 years after you sell the home. These records include all documents related to the purchase of the home, as well as records of any improvements you may have made, such as remodeling or additions. It's important to keep a record of the expenses you may have incurred in buying or selling the home as well, such as legal fees and commissions paid to the real estate agents. These types of expenses are included when calculating your capital gain, which is the profit from the sale of an asset. If you'd like to know more about capital gain and how it will affect your taxes, you should seek the advice of a reputable CPA. Okay, so tax documents. You'll want to keep tax-related documents at least for 7 years. The IRS can audit you for 3 years after you file your return if it suspects a good faith error, and the IRS has 6 years to challenge your return if they think you're underreported your gross income by 25% or more. And that's according to bankrate.com. A 7-year window should cover you in either event. Brokerage statements. It's good practice to hold on to your quarterly statements until you've received your annual statement to make sure they match up. Keep your records of purchase and sales of securities in case you need to prove capital gains or losses at tax time. Bills. You can shred your bills once the payment clears. Now remember that if it's a big ticket item, furniture, computers, jewelry, keep the bill as long as you have the item, because you never know when you'll have to substantiate an insurance claim in the event of a loss or damage, and keeping the bill is the proof of value. Retirement plan statements. Keep your quarterly statements for 1 year, and then you can shred them once you match to your annual statement. Keep the annual statements until you retire. When it comes to keeping documents, if you can scan and save them, do that. Unless for some reason you need to keep the originals. For example, some military organizations don't want copies, they want the original documents. So even in that case, you should still have a soft copy, meaning on the computer, or make a copy yourself at home for a paper document. For originals, you want to keep them safe in a waterproof safe or fireproof safe. Another good practice is to back up all those soft copies on a flash drive or external hard drive and keep that in a safe as well. Now you may be asking, what about a safe deposit box? Now those are great, but what if something happens to you? How will your loved one be able to access those boxes right away? Keep electronic copies of all the documents for safekeeping. All right, now where are you keeping your money? In a jar buried in the backyard, under your mattress, or in a financial institution? Where you keep your money is just as important as how you spend it. Is your account loaded with fees and other charges? Is it a high interest bearing account? Does it have the best value and convenience for you? If you bank at Life CU, probably yes. It's very convenient and a very good value. But these questions are you definitely need to ask them yourself. Are you with a traditional bank, credit union, or online bank also? Now, I'm going to say this once, but I'll say it again 1,000 times. Why credit unions are the way to go. Now, credit unions are a cooperative financial institution that is owned and controlled by the people who use its services. The people who use a credit union are its members, and they have something in common, such as where they work, live, or attend church, whatever it might be. Because credit unions are not for profit, they provide more desirable rates and fees than banks. You can visit Life Credit Union's website to learn more about the products and service offered to you. Banks need to pay out to shareholders and everything along those lines, so they need to maximize profits. Credit unions are not the same. All right, so financial clutter that can be cleared up. The payoffs, which include, lowering your banking costs, less risk of identity theft, better financial planning, and an end to the chaos are worth the time and effort. Make an inventory of accounts and a balance sheet, and then figure out which ones can be consolidated, which you don't use or even realize you still had. Make a plan to clear those up. You only need 1 or 2 bank accounts. More than that means more paperwork, fees, and maybe even ID theft. Forgotten accounts can be declared abandoned and confiscated by the state and could be difficult to be recovered. I had to go through that once. To clean up credit card accounts, what you need to do is make a list of your credit cards in order of the highest interest rate to the lowest interest rate. And what you want to do is transfer those balances from the highest rates to the lowest. You also may want to close those high rate accounts, but keep in mind the length of time you've had that account open. If it's your longest by 5 years, then you might want to transfer the balances to the lower rate, but then negotiate a lower interest rate from that lender. Okay, so you also need to make more than the minimum payments on the low rate accounts. Paying it off as fast as possible is obviously ideal. Whenever you have an extra windfall, whatever it might be, put it towards those accounts so you can get out of debt. And finally, you need to monitor the rates until the balances are paid off. To get rid of 401k clutter, roll over old accounts to your new employer's plan as soon as you're eligible to do so. If your new employer doesn't offer this benefit, roll over into an individual retirement account or IRA. Some banks will count an IRA toward a minimum balance that can earn reduced or waived fees on a checking account or other services. Rolling over an old 401k when you start a new job can also reduce the temptation to cash out your investment. So what's your action plan? Now that you've assessed the mess, checked your net worth, and gotten rid of unnecessary documents, you'll have a better idea of what's working and what wasn't. This is where you sit down and reevaluate your goals, budget, and savings plan. If you didn't achieve your financial goals for 2018, it's not too late to get started for 2019. Now, what is your action plan for paying off and getting out of debt? Are you going to tackle the highest interest rate first or lowest balance? It was just America Saves Week from February 25th through March 2nd of this year. How many of you have taken the pledge? I, James Matthews, pledge to save money, reduce debt, and build wealth over time. I will encourage my family and friends to do the same. Might want to say it with me at home, but I feel as though this pledge should be something that we live by every day of the year. How many of us have said that we're going to do better? But after a few months, even after a few weeks or even days, you've forgotten about what you were supposed to be doing. I suggest printing this pledge and leaving it where you can see it and repeat it every day if necessary. Now is the time for change. I've started my own financial spring cleaning, and although I do it every year, believe me, it's eye-opening. Always remember that being aware of your circumstances is essential to moving forward. Okay, so now that you've signed the pledge, let's review 5 easy steps for making sure your finances stay clean all year long, because that's really the goal of any spring cleaning. Making sure next year's spring cleaning isn't a total reboot. You want to make serious progress instead of repeating the same deep cleaning every year. All right, so just like with any other spring cleaning, you can't really get organized until you get rid of everything you don't need. Like spring cleaning your home, you need to embrace the latest cleaning techniques, in this case, technology. Get rid of those stacks of paper, statements you never look at, but make sure you have electronic copies that are easy to search. Also, check how long you need to keep your statements for tax and other purposes, like I said at the beginning of this presentation. Finally, make sure your financial records are backed up, preferably on the cloud and on an external hard drive. Heaven forbid your house should suffer a natural disaster or a fire. You want to ensure those records are safe and available. All right, so step 2 of we're going to need to automate your savings. If your employer pays you via direct deposit, and 82% of Americans do, then you can ask your company to split your direct deposit. That's right, most employers will let you send some money to one bank account and some money to another. So you can divert some of your paycheck directly into a separate emergency savings account. You won't miss the money because you'll never see it in your primary account. This works especially well when you get a raise. So you just send the extra cash directly to your emergency fund, so you build it up to cover at least 3 months, preferably 6 months of expenses or even longer. So instead of just automating your payments, you can automating your savings, you can automate your payments as well. Almost every bank and credit card and even many utilities offer automatic bill pay. You set the day you want the bill to be paid, and that amount is automatically deducted from your bank account right then. Now, what's the advantage besides the worry of paying bills? Well, you'll never pay a late fee ever again. Of course, a danger of automatic bill pay is that you blow your budget on some credit card purchase you've forgotten. You might not notice how low your bank balance has gotten, but because you've done a thorough spring cleaning, you shouldn't be distracted by all the clutter, and you can easily keep track online. Now, before you can save money, you need to get your facts straight. What you need is a budget. Sounds awful, doesn't it? Who enjoys budgeting their money? I do it every day, and it never gets more exciting. It's like saying you enjoy flossing your teeth. In both cases, you know it's good for you, but it sure does not sound like fun. Honestly, it's not, but it can be easy. It only takes 4 simple steps. Okay, so finally, let's wrap up where we began, with cleaning. If you hate making a budget, let technology do it for you. There are secure online programs such as Mint, which lets you link all your accounts and does the math for you, even allowing you to tinker with the amounts in your budget and see how that would change your savings in a year in the future. Online spreadsheets like Tiller allow you to create a more traditional budget. You customize the fields and then plug in your income and expenses. It's a little more work, but it saves you so much time. And finally, banks and credit unions are increasingly offering services just like Mint and Tiller. I would go ahead and click around the website of your own bank and credit union. I know lifecu.org has a bunch of resources, and you might want to find they offer these tools already. So in essence, your banking institution can help you clean up your finances. And for the second step of our action plan, what we're going to need to do is start by shredding your documents or safely burning them. Don't throw them away. Personal info being thrown away leads to identity theft. Check out your bank accounts. If you're paying a lot of fees, then shop around for a new account. Check your credit and your credit score. Make sure you stay on top of it. Everyone is entitled to a free yearly credit report. You can do this at annualcreditreport.com if you haven't already done so this year. And also make larger payments, if possible, towards that debt. It's not going to go away, and if you have anything extra, put it towards it. And then we should be good. Then you're done with your financial spring cleaning. Just wanted to let you know, if you're a member of Life Credit Union, thank you. If you're not currently a member or a customer of Life Credit Union, you're invited to join. Remember, Life Credit Union can help you with your financial goals and challenges. But for more information and additional free financial education, visit LifeCU's website at lifecu.org. And if you have additional questions, you can reach out to Ann Wires at ann@lifecu.org. But thank you from everyone here at Coffee and Consolidated Credit for attending our monthly webinar. Please make sure to register for next month's Gen X Retirement Guide webinar on lifecu.org. Thank you again, and until next time, I'm James Matthews. Have a good one.